Internal control is something that's popped up on the exam quite recently, and it's not an official qualitative characteristic. What it is to do with is reliability. So reliability requires that info must be free from error and bias. Well, what's internal control got to do with that? Well, that means a business has got to have practices and procedures involved to ensure that all your accounting records are accurate and reliable, and the firm's assets are protected from theft, fraud, and misrepresentation. So looking at an example, what is internal control and how does it help enforce reliability? Well, the first way is that it ensures the firm's records and reports are accurate and reliable. So take this statement that we got sent. So Lana's Landscapes, which is us, Where Playgrounds Galore, has sent us a statement showing all our transactions for the month, and importantly, they've put the balance at the end saying we owe them $7,040. So a good internal control will mean we keep this document, we file it, but not only that, we also check it against our records to make sure it matches. That way we can check whether everything's reliable, and specifically we should be able to go back and find, in this case, we should have a ledger, so we should have a subsidiary ledger for a creditor called Lana's Landscapes. Does our ledger equal what they're saying it should? We should also have copies and originals of each of the documents that have been issued during the month. So in this case we can see there was an invoice, they sold us something, so we should have a copy of that, or actually the original. We paid them, so there should be a receipt. Actually that would be a check, but we've been given a credit, so we should have kept the credit note, and so on. Internal control can also help protect the firm's assets from theft, fraud, and misrepresentation. So let's say a customer walks into a sports store and asks for 3 pairs of shoes. The owner of the business checks the store's computer, which we call a stock card, and it says there should be 3 pairs there. The owner then checks the latest stock take, and there in fact were 3 pairs counted, and they were counted by the staff member called Matthew. However, when the owner goes to the storeroom, there's only 1 pair there, 2 are missing. Obviously stock losses happen, so in this case we can use internal control to help sort of prevent that. We're not going to be able to prevent all stock losses, but we can prevent the ones that are due to theft and fraud. So, for example, what if Matthew was responsible for not only doing the stock take, he was the one that counted, or at least said that there were 3 pairs on the stock take. He's the one that's in charge of putting that number into the computer, and he's also the person that's in charge of managing the stock room. So because he could have stolen these shoes and never ever reported it. He wouldn't have recorded on the stock take, it wouldn't have gone in the stock card. So that would explain why the computer said we should have 3, and yet we only had 1 pair. So what we say is that this demonstrates a lack of control. What we really should do is have 1 person responsible for each of these things. There should be 1 person in charge of managing our stock cards, 1 person in charge of doing all the stock takes, and 1 person in charge of managing the stock room, and they should all be separate people. So internal control is about having good procedures. So these are some of the things we want to talk about when we're talking about internal control. Have well-defined responsibilities for staff, be really clear who's in charge of what. So Matthew's only in charge of the storeroom, someone else is in charge of the stock take, for example. Separate duties, so don't have 1 person in charge of everything, like our example. Break it down into an entire process, that way there's people to check up on the other people in that process. Rotate duties, so don't leave someone in charge of the 1 thing for too long, that way they're never monitored as much and they can develop ways to cheat the system. Have authorization rules, so if someone wants to spend a certain amount or take out cash or something, there's got to be people who approve it. This is probably the best one for accounting. Document control, make sure we've got scanned and original copies of everything. You can put them in a computer system now, you don't have to store hard copies necessarily, but that's the best way to prevent any errors and misunderstandings. If it's a retail store, you can also have physical safeguards like security tags, alarms and so on. And just to go back, together all of these items, if you get asked about internal control, these are the things that you'll need to talk about. So these are all strategies that you can talk about. Not one's any better than the other, you just need to talk about a couple. And then remember, it's all related to reliability by preventing errors in our accounting system.